Hello everybody, Brian here from quantlabs.net. Today is February 28th, Monday, 9:32 a.m. my time, same as New York. What I want to talk about is a set of questions that came in last night from somebody on Facebook. I think it's a good topic for this Thursday webinar, so that'll be March 3rd, Thursday, 7 p.m. Okay, so let's go over what's been going on in the markets. I'm going to go over this as a topic. I think it's very topical, if that makes sense. Alright, so let's see what's going on in the world of just the general markets. Everything's pretty well down. Everything seems to be coming back, which is okay. That could be just temporary. We have oil and gold is up, as well as the overall Forex is down, crypto's down as well, except for the altcoins. And the Japan last night was slightly up as well as the FTSE was down. That's all because of this whatnot of the Russian escalation. So that's all fine and good. I mean, that's escalation when he wants to blow up the world. So you think that that would set a panic in. So there is this notion that gold is one of the safe havens, and that traditionally Bitcoin would be looked upon as a safe haven as well. So here's the overall markets instead of me blabbing into the camera here. So looking at that, you would think that that's where things are. So I've done the tear sheets, better performance with defensive assets, so we got that covered. But in terms of crypto, it's much harder now because of where things are at. So these sets of questions came in last night from somebody on Facebook, which I think are very legitimate. By the way, is spoofing is illegal in equity markets? What's your opinion of it in the crypto market? As is quite evident here and there. I think it's everywhere, so I just said, hey man, you're looking at the crypto markets, it's basically a free-for-all in all areas of crypto, okay? So there's no regulation at all. I don't think they may try to regulate it, but on an international basis, there's nothing you can do about it. But I guess now exchanges would be scared if the market makers conducted that behavior, as the exchanges would be punished. Well, that's true as well. That is very true. But the thing is that what's going on in the markets right now, a lot of people don't know, but Binance US, I think it was 2 weeks ago they announced that they're investigating Binance US for this exactly of the market makers on Binance in the US. So they are investigating that. They've also accused the founder CZ of being part of that, where in Binance.us is that they have market makers going against the price of certain coins. So on the international level of Binance.com out of Asia, there's going to be, that regulation is not going to really exist. It's just, I don't think the regulation, and I believe the servers are out of Japan, so I wouldn't know if the Japanese regulators would catch on to this and actually sanction Binance globally for the same thing. I mean, that's potentially possible, but there's definitely market makers happening in exchanges like the bigger ones like Binance and Coinbase. I wouldn't be surprised that it is happening as well. So, and by the way, what's your perspective on options and how that affects the market? The options are kind of important. It's not that fundamental, just due that the current spot market is kind of like a casino. There's really no rhyme or reason why certain coins move and don't move. I mean, there's like, if you look at my set of videos I put up last week, as here, this one 2 days ago, PAXG cryptocurrency is the safest way to buy gold. When Russia invaded into the Ukraine, that coin took off. So you can see that in the chart. If you look at that video or watch that video, you'll see that in PAXG. But when you look at the description of this company, what's called PAX, whatever, they claim that this is the safest way to buy gold. That's how they market it. So again, you can take a look at that. But the crypto space does have those certain kind of coins. And now the other big thing is right now is this, is that I think a lot of people know that, and I mentioned it already, that mainstream assets like stock markets and whatnot and the crypto markets are tied together. They never were. The whole idea was up until sometime in December when it flipped over to where it's at now. If there was, let's say, an invasion in November of 2021, most likely you would see the crypto markets go up because people would pour money into that, no different than gold, and and then there would be a spike in gold as well. But we're not seeing that, and a lot of that is due to the fact of the manipulation. Crypto markets are not responding as you think they were, but they're tied back to the mainstream markets. I believe that's just because there's so much institutional capital in the crypto markets that they sort of suppress what naturally the crypto market should be doing. And not just that, but when you look at the overall gold price as well, I'm not sure if you look at the price of gold, you would think gold would be really much higher than it currently is. Like, here's gold right now, gold in US dollar, but when you look at the monthly, it's gone up. It's peaked 2012, which is fine, but this should be a lot higher, especially now when you get somebody like Putin threatening World War III. Okay, and look what gold has not done, as it should. This should spike. That should spike. Okay, let me just show you here again. Here's gold again. That right there, that rally should be spiking, and it's not. Okay, and then when you look at the Bitcoin, it's actually down. So again, that's because Bitcoin's down because everything else in the mainstream markets are down as well. So that connection where crypto and Bitcoin are overall performing the same way as mainstream markets, and I believe a lot of that has to do with, as I said, is there's just so much institutional capital, and it can suppress the price of Bitcoin as well as the other coins as well. So then it continues along. I mean, throughout history, or if you consider compared to theory like 2080, most wealth control is probably controlled by a few parties. That is exactly true. When you look at now, I'm not going to pull out the conspiracy theory, but I'll just say this: when you look at Davos, and when you look at the Davos group, and you look at the members that go to that conference, those are your world leaders that have actual influence on the world, basically. So you got the Google founder Eric Schmidt there. You got the likes of Peter Thiel. You got the likes of security companies, Paladin or whatever. The thing is that it shows you those are the real influencers of where things go, even if it's planned or not, if there's an agenda or not. But it's very evident that there is something at a higher power in control of a lot of this. So they are the ones that are able to influence which way the markets go and which way the markets don't go. So there is that for sure. I mean, it's evident. So he continues with this. I mean, most new traders and non-tech people still always value fiat as they care about the gain relative to the dollar. Okay, so I put up a video earlier exactly about the dollar. I don't know if I have the chart still here, but it really comes back down to U.S. debt of $30 trillion. Because that right there is an effect. So as I'm going to repeat myself in the same video, how can you tell me that people are going to put money into the fiat market or the overall, it's safe? That's what they know. So that's where they'll hold their money. But here's where things are going to turn upside down very quickly. And it has been like this for a good number of years now. $30 trillion debt, okay? That's on the books for the U.S. government. 125 million people are the taxpayer holding up over an overall population of 332 million people. So when you factor, and you just watch the other video I put up today on this, That's what's holding back the U.S. dollar. So there is a form of manipulation going on there, and it's now affecting the overall crypto market as well. So there is no doubt on that. So as I said, either way, BTC is tied to the performance of the stock market, as explained in this video here. But that could not change as used as a hedge. So traditionally, if you're going to use these as a hedge, that is not possible. The only way to use crypto as a hedge now is to have a consistently performing bot in the space of crypto that performs intelligently and gives you consistent returns. That's the only way you can get a hedge. And to get that for most people is next to impossible, especially as this person says, new traders and non-tech people. Okay, so that, can they achieve that? No. Can financial advisors achieve that? No. But when you get a guy like James Simmons or an operation like Rentec or Ray Dalio, yeah, they can accomplish that. But regular mortal people cannot achieve that. Okay, so that's just the way it is, right? So I'm going to talk about that on Thursday. This Thursday, as I said. So again, if you want to be notified about that, 2 things I would strongly recommend you do. Get on the mailing list that I've got, quantlabs.net/contact. We'll expand on this. You can be part of the conversation if you want. Everything's done on Telegram. On top of that, just keep watching the videos. Other than that, thanks for watching. Have a good day. And hopefully I'll help out people from my perspective on all this type of topic. Over and out.